Despite disappointing data coming out from the UK, can we still expect a rate hike from the Bank of England this year? With me to discuss this and much more is James Hyerczyk from FX Empire. Firstly, James, this week we had data coming out from Japan, and that was second quarter preliminary GDP estimates. Now, this data came in better than expected, but do you think final figures will maintain this strength?
The key to the Japanese economy are the exports. And as long as the exports continue to strengthen and rise, the GDP should continue to strengthen and rise also. Now, in the first quarter, exports rose because the US dollar weakened against the Japanese yen. However, since early part of July, the yen has strengthened against the dollar. So I think we're going to have a hard time maintaining those growth figures that we saw in the first quarter unless there's a sudden rise in the US dollar versus the Japanese yen. And right now it looks as if the political uncertainty in the US and the geopolitical uncertainty and also the uncertainty over Fed policy into the end of the year is making it difficult for investors to bet against the Japanese yen. So I'm going to have to say that the GDP figures are kind of coming the same or lower during the second quarter.
And July's UK inflation figures missed market expectations, and this caused the pound to weaken and hopes for a Bank of England rate hike to diminish. James, do you really think that we're not going to see a Bank of England rate hike in the foreseeable future?
As far as the UK economy is concerned, the weak inflation numbers are a concern for all central banks. And at this time, I do not expect the Bank of England to make any interest rate decision until the inflation figures hit their objectives. And even at that point, I think the Bank of England may consider waiting for these inflation figures to overshoot the target just to make sure that the economy is growing. I think that's something the Fed will be considering also. Nobody wants to make a change too fast. And if the Bank of England makes a move to tighten monetary policy too soon, could basically kill off the economic growth in the country. So I think they're going to wait for inflation to overshoot the target before they make their next interest rate decision.
And we also had Euro area GDP data out this week. Now, the data either came in line or above market expectations. So do you think this means that the Euro area economy is back on track, or just that the market accurately priced all the problems the area is facing?
Now, recently, the European GDP hit its target. However, I also believe that the central bank is going to wait for a combination of economic growth and inflation before making a move on interest rates. I think we're going to maintain the status quo. They're going to maintain the status quo because the situation is still uncertain around the world as far as whether we have this global growth that could support a economy like the Eurozone. So I think that maybe they did get the guesses right and the estimates right, but I don't expect this trend to continue. If the economy was on a path to strengthen, then I think the European Central Bank would be a little bit firmer in their tone about tightening monetary policy rather than just put an end to stimulus at a gradual rate. I think they would have announced that they were going to be a little bit more aggressive. So I'm pretty certain that the ECB is still unsure about the strength of its own economy, so it's going to move at a gradual pace.
Well, thanks for joining us today, James, and providing your insight. So that's all from us here today, but be sure to keep staying tuned for all of our broadcasts.